Hey guys, hope you guys had a good week trading. So as you can see by this chart, it has been another bear week. So this actually is pretty impressive. If you look at the last 9 trading days on SPY, we have only closed green one time, and that was on October 24th. Everything else has been a drop. We have had 1, 2, 3, 4 of the last 1, 2, 3, 4, 5, 6, 7, 8. Excuse me, 4 of the last 8 trading days have been 1% or more drops also. So what happened today? We actually looked pretty good overnight. We had a really nice green gap up, and we were looking pretty strong after hours. Amazon had a good earnings last night. Actually was up almost 7% today. Looked really good. So tech as a whole today looked really, really strong. However, the Dow did not look good, and by middle day, end of day, SPY also just did not look very good. So on SPY, we came down, and I had told you guys I had that target of 410.26 right here. We did not quite close under it. We hit it and bounced. So from here, my next really downside target is this double demand right down here at 404.31 and 405.17. As you can see, we're in our bear channel. That resistance for next Monday is 413.9, and realistically we're going to need to see a closure minimally over 414.56, but we are in extreme bear momentum on the daily, so we should not really expect a move back over the daily 8 EMA, which will be somewhere in this 416 area. Now going over to the weekly here, you can see this is a very bearish weekly. In the last 2 weeks, we've dropped almost a full 5%. That's a big drop in 2 weeks. So this honestly, and I've been saying this for a while now, this market right now reminds me a lot of early into spring 2022, which means we could be seeing a pretty large drop coming. Interestingly enough, we are officially in correction territory. That's a 10% drop from highs, and we are halfway to a bear market. So, obviously corrections don't always lead to bear markets, but every bear market starts as a correction. So from here on SPY, we did get under my 411.26 weekly demand. Remember, this was my target for the week, 411.26 to 415.82. So we did take this supply out right here. Now this is where it's interesting. As you can see, look at this massive gap here. This goes back to the March lows, and even back in December, this is a big support area. 382.06. Well, let's fix that up. It just got bumped up a little bit there. There you go. 381.93. This is my next major downside target. Now, again, I don't expect that in 1 week, 2 weeks, but by end of year, if we continue this trend, that is where we should look. The weekly 8 and 20 EMA are crossed under. We closed under the 50 and 100 weekly EMA. That leaves a 200 up next. We are also in extreme bear momentum on the daily and weekly for SPY and futures. Now, looking at futures here, same thing. We came down, we touched 41.27, but had a nice little bounce there, and we are under 41.56 now. So from here, my next major target is still 40.75. Bulls are going to have a lot of resistance if they push back up here at 41.87. Going over to the weekly here, same thing. We came down, we hit my target of 41.91. We even hit my target of 41.31. But on the futures, we did not close below that level. Same thing here. I'm looking on the weekly time frame, a move to the 200 EMA, which is going to target 38.94 and 39.20. Those are my 2 big targets here to the downside. I would not imagine or even want to think about going long in this market until minimally the 20 EMA on the weekly is taken back, which is up all the way up at 43.56 right now. Now going over to the Qs. Qs is interesting. It's the only one today that did get a new daily demand. So it got a new daily demand at 354.58. It took out one of our demands right here, but it didn't quite get high enough to hit 349.15 to take that out. So from an upside standpoint, we're going to look to push up and get all the way back up here into this double demand at 354 area. Now, this again, I told you yesterday, was likely going to be a multi-day fight at the 200 EMA. And despite the bounce back up and the rejection, we actually did close back under the 200 EMA. To the downside, 343.58 is first support. And then I'm looking at 336.31 and 337.6. On a weekly time frame here, same thing. After our weekly supply last week, we have lost the 8 and 20. We actually were looking to break over it with that double bottom I mentioned, but we got a hard rejection, and we're now at the weekly 50 EMA. Next major downside target I have is 330.16, and then it's 322.05. Now going over the NQ here, we did not get that new daily demand today. And same thing, we attempted to get back over the 200 EMA, but we failed to get over it. From here, our target is 14,110 and then 13,917. Bigger downside target potentially could be 13,728. When we go over to the weekly here, you can see, same thing, we lost the 8 and 20. We bounced off the 50. So this is where the bears are going to really need to fight hard next week, and they're going to start targeting 13,582 and eventually 13,305, which is back from the March, or this is back from May here. Now, again, if you remember, on SPY, we're thinking about the March lows right here, but on Qs, and NQ, we're only getting to the May lows because NQ, for the most part, has held up so much stronger than SPY has. Now the VIX, this is what's super interesting to me. I love the VIX. I talked about yesterday that we had a double top rejection off of 21.71. We just could not break through that supply. Again, we attempted today to break through it and we got hard rejected, and that was perfectly where we bounced off of a bottom too. So, but on the same side of things, SPY had a pretty red day. SPY dropped, almost $5.40 total today, but we only had a $2 or 2.85% move up on the VIX. The way I'm seeing it right now is 26.17 is my upside VIX target. Bears really need to break through 21.71 and 22.64. Break through those levels, and I feel more confident that we could see an actual bear market before, maybe even before end of year. Now, next week is an interesting week. We have FOMC. So remember last FOMC, it was very, very clear that 2024 was going to be all about no rate cuts, longer and higher for longer. J Powell was pretty hawkish. There wasn't much bullishness to be had out of that. So now this is where it gets interesting. On one side of thing, inflation is technically plateauing here, but is plateauing good enough to justify no more rate hikes this year? Remember, J Powell was pretty clear that we were going to get another rate hike this year, and there was quite a few other FOMC members that have also spoken on that, and were very clear that we will get another rate hike before end of year. This meeting right now, it's pretty much guaranteed at this point based on the odds and the probabilities that we will not get a rate hike. However, December is still a bit of a wild card. We're going to get another inflation reading, and once November starts, November 1st, we'll get an updated Cleveland Fed nowcast, and I'll kind of touch on that whenever that comes. And that will come on perfect timing, because that will come on Wednesday when we get our FOMC, and I'll be able to kind of give you guys a better gauge of the future with that. But if that Cleveland Fed is projecting further upside movement on CPI, likely we will get another rate hike in December. Markets are not going to like that. That is going to be hard hitting in the market, and I don't think that's going to be very, very good. Now, one thing that is super interesting to me is that people always say sell the last rate hike. Now, last rate hike was in June and July area. And when did we start the sell-off? That was pretty much in July. So market might already be on that path of sell the last hike. So if we get another hike in December, that will be interesting to see how markets react to that. But my point is right now that if inflation is still going up, this is where the Fed is probably going to break the market, because they have to get that inflation under control. Now, granted, they don't want to really break the market, but that's just what's going to happen, and they're going to break the economy, because they're going to have to keep hiking. Interest rates are already insane. I'm seeing some 9 and 10% interest rates already on vehicles and houses, and I mean, that's insane. Most people cannot afford that right now. Now, again, that's what they want, though. They want the economy to contract a little bit, because obviously that means inflation is going to slow down. But it's going to be rough. I think 2024 certainly could be a very, very rough year, not only for the markets, but for just normal people. I'm interested to see what the Fed has to say on Wednesday, and if anything that he said last FOMOC is being pivoted on or changed or not. But hope you guys have a good weekend. We had a great week trading this week, and I'll see you guys next week.